Stock market and commodities have spiked on the news that China might be unlocking. Do you think that China is ready to pivot away from lockdowns? Let me know down in the comments below. If China unlocks, iron ore futures will likely do very well. Looking at this 3-year chart, iron has recently broke below the pandemic lows. That's below $80. Hence, a longer term as well as intermediate term buying opportunity might be taking place right now. Talking about the intermediate term, iron ore cycles tend to last for just over 4 months, and the duration ranges anywhere from 2.5 months to nearly 6 months. Each cycle rally tops above or sometimes at the 50-day moving average. And each cycle rally rises the RSI by well over 20 points to break above the neutral level at 50. And exactly the opposite is true for cycle declines. Zooming in, iron ore has dropped by over 55% since last March and by over 65% since mid-2021. So there is a good chance that things are becoming undervalued a little. There is also a good chance that the cycle low, the end of the previous cycle, took place on Halloween, as iron ore drops to 3-year record lows to scare everyone. That recent Halloween low implies a cycle lasting for 165 days, which is already a relatively long cycle, meaning that a bounce is that much more likely. 14-day RSI reached the lowest level since September last year, September 2021. Again, meaning that iron ore is oversold and bounce is likely. As you see on the chart, since late July, iron ore has followed a declining channel. And if this recent bounce over the last few days breaks out of this channel, that would be just another sign or just another confirmation that iron ore indeed started a new cycle. In that case, even if we will see a deeper recession next year, a bounce to around $110 is likely. As I often mentioned in my older videos, the most commonly observed Fibonacci levels are 38%, 50% and 62% levels. Hence, a bounce into these levels at $100 to $120 is likely within a rallying stage of a new cycle. By the way, the 200-day moving average will likely decline into that $120 as well while the cycle rallies. So that's just another sign of resistance or target levels converging a little bit. Looking at market sentiment, it's actually fine to find market sentiment for iron ore anywhere online. One way of looking at market sentiment is a ratio of producers to iron ore itself. So as you see over here, recently at this Halloween low, the sentiment came pretty close into this blue area. And yes, a further drop is still likely into the green or dark green area, but that would be a repetition of what happened during the pandemic lows, and those don't usually happen every year. So a low anywhere in this blue zone is quite likely. And we see the market sentiment has already poked through this purple zone into the yellow area. Again, perhaps confirming that a new cycle has started pretty recently. By the way, the market sentiment over here didn't bottom out on Halloween. It bottomed at the beginning of October, which is, as I see right now, another positive sign as we see a positive divergence. That's when price gives us a lower low versus an early October low, while the market sentiment gives us a higher low. That's a positive divergence, usually a sign of an upcoming rally. And clearly, as the 3-year history shows, as market sentiment reaches anywhere around the level of 8 over here, this red zone, that's where you probably might want to reduce your position size or sell some of your holdings. And lastly, looking at seasonality of iron ore. Again, you might not be able to find this information anywhere online, so I had to download the data and make this chart myself. You are welcome, by the way, for more on similar sort of analysis on a range of assets. Make sure to join us at myfinancesteacher.org. Seasonality also suggests that perhaps a buying opportunity is coming, as November usually gives us around 4% appreciation in iron ore prices, and December is even more attractive with around 11% appreciation in iron ore prices. And this is seasonality over the last 6 years from 2016. So if you do agree with market sentiment, with seasonality, if you do agree that there is perhaps some buying opportunity coming up in iron ore producers or in the futures, then in that case, give this video a thumbs up. If instead you think that China isn't unlocking and more bad news is coming for the general stock markets as well as commodities, give this video a thumbs up or a thumbs down if you want. In either case, you gotta share this video with your friends and share your opinion down in the comments below. Have a nice day. Bye bye.